Hey everyone, this is Kirk here again at Option Alpha. In today's video, which is part 3 of my opening range breakout behind the scenes mini series, I'm going to be turning on my opening range breakout bot live. I want to show you how I got to the different strategies I'm going to be running and kind of show you the different backtests and processes that I used for researching this. So in the last 2 parts, we kind of introduced the opening range breakout, did some initial researching and different filters and variations. Today we're going to be doing more of that, and eventually we're going to get to the point of turning on my live bot. So today will be the first day that I turn on live, and it will go into the pot of other 0DT, 1DT type strategies that I'm currently running. So if you do enjoy this video, let me know. Add a comment below, like, subscribe, share, and we'll get going here. So, okay, so here's first thing first. We did a backtest or series of backtests a long time ago. It was actually early November, I think, when we originally did these backtests in part 2. So it's been a little bit, but this screenshot is a screenshot that I took of the original link backtest. I did add a link to the backtest, kind of the original combination of backtests that we started with. I added a link right below this video so you can check out those, but I reran the backtest. And so the reason that I'm sharing this kind of screenshot here is because I want you to see essentially what happened right here, or like the differences between when we originally ran this backtest the last time and what happened since then. So basically the last 2-ish months of trading activity, just to kind of see how it might have changed. All right, so what you're going to notice is you're going to take a look at this little area here. So this is not the $19,000, but the actual P&L charts here, how they actually switch and change. Okay, so this is the backtest old screenshot, and this is the new one. And so you can see that difference. I know I have my screen a little bit different in this one, but you can see basically what happened. So essentially what happened is that when we stopped running, or basically the last time that we kind of ran this analysis was around here, November 7th or so, somewhere in here. So we did have a little bit of a drawdown. So I think it was right about here is where the analysis started last time. So I reran the backtest. So this includes the new kind of out of sample data, essentially, if you want to call it that, or basically the most recent history of data. But you did see that we had a little bit of a drawdown in both of the different strategies, both the short call spread and the short put spread, really kind of consolidated along this timeline here. And this is the combined strategy up at the top. But basically, both of those strategies had a little bit of a drawdown, and then they've kind of since been working their way back. So it's actually interesting to see, because if I go back to the original screenshot down here in the bottom left, you can see these are the max drawdowns, the profit factors, the total P&Ls. Just take a look at those numbers. And then if I go back here, you can see that those numbers are definitely a little bit lower. They're not insanely lower. I still think it's a good one overall. But my goal in testing recently was to figure out, okay, how can we get through some of these periods, or basically, like, what can we learn from some of these periods? If we had a lot of volatility, what other things could we test? Okay, so here's what I started to do. And this is exactly how I went through the process and how I got to this point. So I'm just kind of rehashing the process here with you guys. I'm going to show you some backtests. I'll link to all of these backtests so you can take a look at them yourself, run your own variations. But this is the process that I kind of used. So by the way, anytime you want to create a new version of a backtest or test some samples or variations, what you're going to do is just click on any of the backtests here. You can open the backtest in a new window. So I'll say, like, open my short call spread here in a new window. And then from here, you're going to click on the compare button up in the top right-hand corner. And after you do that, then you're going to click the 3 little dots, and then you're going to click add variation. And this is how you can quickly spin up new versions of the bot and add and tweak different variations. So I'm not going to do that here because I already did that. And so what I started with is I started with the short call spread. So I opened that short call spread that I was using, my existing short call spread, kind of the baseline scenario. And what I started to do was to do different things. So one of the things I thought was that we haven't tested yet was different profit targets. So I started with some different profit targets. You can see I tested 50, 25. I actually tested a lot more of that. I just kind of consolidated it down so you could see this. But I tested like 30, 45, 75. I tested all kinds of different things. Ultimately, what we ended up seeing is that the profit taking on this particular strategy did not actually improve the results of it. So you can see B and C here, which is the orange and then the purple line, significantly underperformed the actual kind of baseline scenario for the short call spread component of it, kind of the bearish breakout, if you will. And then what I also started to do is I also tested some in the money touch. So I said, okay, well, maybe it's the case that, I don't get a profit, but I want to stop a loser from turning around. And so effectively you could call it kind of like a mini stop loss. But I just want to see, did that actually improve it? And it didn't. So you can see still A was far and away, kind of the best strategy, the winning strategy in this case. Okay. So then I kept going even further, and I opened A up in a new tab again, just like I, just showed you how to do. And then I tested again some, in the money touch, like I had that other one here. And then I also tested different variations of in the money touch. I said, okay, well, maybe if I do, right immediately touching, and then what if I do, $5 in the money? What if I do $10 in the money? What if I do $10 before it gets in the money? So basically, if it's $10 away from being touched, then test that. So it's all kinds of variations that I was testing. And again, this is not the end all be all. I probably tested in totality all entire orb strategy, maybe 35, 40, 50 different combinations of different things, just seeing if anything would kind of stick and kind of moving things around. And it wasn't I was just throwing junk up. I was thinking through it, going, okay, well, if I have a short call spread and I get a bearish breakout and then the stock turns around and that's what creates losses, can I, somehow take profits on the way down, or if it turns around, stop it before it goes to max loss? So that was kind of my thought process with some of these touch combinations. At the end of the day, though, you can see pretty much every single one of them was subpar. So certainly doing $10, before getting in the money, and then $10 in the money, that's like a negative, so it's actually in the money. These were not good ideas. They severely underperformed the baseline scenario, okay? And then so the last thing I tested, kind of in some of these combinations, I said, okay, well, let's change it up and not test the actual position itself kind of moving around. Let's test something else like VIX. So maybe the reason that we had these bearish days where the market goes down and we get this bearish break, because again, this is the short call spread side. The reason that we get, maybe the hypothesis was, the reason that we get these bearish breaks is because VIX is going up, right? We get a big bearish day and then maybe there's a reversal at the end of the day. And so what ended up happening is I tested, maybe a 5% VIX change on the day, or 10% or 15% VIX change. Again, it didn't improve performance. I mean, across the board, you saw less performance, lower win weights overall. P&Ls were not significantly better by any stretch. So it really didn't end up working out. And here's the thing that I started to think about as I started to look at, this is exactly how I went through the process. I'm not doing this, backwards looking this. I'm just telling you how I went through the process. What I went back to is I went back to the original strategy and I said, okay, what the heck happened on these days? And what I went through is I went through and researched basically essentially what happened to the market on these days. And if you recall, back during that time period, we had all of the talk of the government shutdown, and actually the government shutdown ended around that time period. And so you had some days where the market was down or flat, and then it had these massive run-ups very, very quickly. So what I would say is that those are things that you just can't predict or backtest your way out of, or curve fit, or try to incorporate into this. You're just going to have some of those things. And what I ended up learning in this one was that you just can't get away from some of those types of days where you have a big reversal for an unknown news item that you just can't predict, black swan type of event. And so this is where position sizing and keeping lots of different strategies in place actually helps out. So I think that that's a valuable lesson. Take from it what you will. But I did that afterwards. I should have done that potentially before. I should have researched a couple of those days before, and maybe that would have led me down a different path. But I did test a lot of different variations, and ultimately, in this case, nothing ended up beating the short call spread. So we're going to stick with this one for right now. That doesn't mean that I can't change my mind. I reserve the right to change my mind and update this if I need to. I'll let you guys know if I do. But if you do find a better backtest or a different combination, please let me know. Add in the comments below. I'd love to know. But for right now, we're going to stick with that short call spread strategy because nothing has been able to beat it so far. All right, so then I moved my attention to the short put spread strategy. I opened this one up in a new tab again and tried some different combinations. So here was my thought on the short put spread strategy. So this one would lose if, again, you remember, this is a short put spread. So you have an opening range breakout, which is bullish. So you have your range, and then you have a breakout above the opening range high, right? So now you're going to enter a bullish short put spread. So this one gets in trouble when the market reverses quickly and goes the opposite direction at the end of the day, or whatever the case is. So my thought here was to do a couple different things. So the first thing that I tried, and again, I tried lots of different combinations. These are the ones that are just most obvious explanations and most obvious examples I can show you. But the first thing that I tried is I tried a different time period. So I said, maybe we just are letting the breakout happen too late in the day. Maybe if we shorten down the breakout time window or lengthen the breakout time window, maybe that will do something different for the strategy. So the original strategy that I ran was the latest entry at about noon. So it was checking the opening range from the first 60 minutes of the day. So it's a 60-minute orb strategy. So essentially 9:30 Eastern time to 10:30. That sets the range, and then a breakout in the next hour and a half, essentially, right? And so that's what you get with this. So one thing is I would note is that basically I stupidly tested a 10 a.m. latest, and I just got zeros. And sometimes people have posted this. I'm guilty of this too, where it's like sometimes I don't think through that. Of course, there's going to be zeros in this one because the opening range hasn't been set at 10 o'clock. So that was a stupid one, but I'm throwing it up there so you guys can see that in there. What I did test is I did test 11 a.m. the latest, basically the breakout right at 10:30. So basically right after the opening range occurs, you get basically a minute or so to test that breakout, and that's it. And it's just, you get into that position. If it's a later breakout, then that's it. This would be considered the first and only breakout, essentially. That's what this one would be considered. The 11 a.m. might be a little bit later breakout, and it's a different one. You just have more time for the breakout to occur. So it stays in that range, and then the breakout occurs. This is the breakout of the range, and it doesn't stay in that range any longer. And then I also tested 1 p.m. I tested 2 p.m. and 2:30 and 1:30 in different time periods. At the end of the day, they didn't actually improve performance. So 1 p.m. was essentially the same as the opening range breakout at 12. 2 was essentially the same. Essentially, the breakouts didn't occur much later in the day, if at all. And so what you saw that these underperformed. So doing the breakout, narrowing that window from the first breakout and only breakout to 11 o'clock and only giving the market 30 minutes of time to break out, it just really didn't improve performance at the end of the day. So that was a dud test, but worthy test that I ended up doing, I think. Okay, so the last thing that I did is I tried a bunch of different profit targets. Again, these are just variations that just show you kind of the context of it, but I tested tons of things in between. So different dollar amounts, different profit target percentages, different touch percentages, all sorts of different things that I ended up testing. But what I ended up finding is, again, the short put spread that we had in our original base case from the behind the scenes part 2 ended up still being the best one. So here I tested just a $40 profit target. Again, be a little bit rational with this one. So if you go down to strategy number A, the average P&L on this strategy was $69. Your average premium that you were taking in was $188. So you just have to test something below there. I tested different combinations of this. Ultimately, nothing ended up, doing as good as strategy number A, which is just letting it go and not caring about it. You also have to factor in, if you're doing some of these profit taking, you got to make sure that you account for slippage on the exit too. So this is another big thing. I've talked about this before, but if you're doing a $40 profit taking or 40% profit taking or 50%, doesn't matter. But just please include a little bit of slippage on your exits, because if you don't, that's assuming you always get filled at your profit target. It just never happens in real life. So that ended up being, again, an interesting dud. 50% did much better. So if you took a little bit more money off the table, basically half your premium, you did better than 40%, but you still significantly underperformed in this case. And then again, for the short put spread, we did a bunch of touch combinations. All of the touch combinations did not work out. So essentially using a touch stop loss or some combination for this particular strategy did not work out. So again, we find that strategy number A was actually the best. And this is an interesting one. I did not think this was going to happen in part 3, just so you guys know. This hasn't happened when I've done other behind the scenes parts where I've done testing. I've found some sort of improvement. It is encouraging to me that the first, combinations that we put together are pretty good. Nothing can beat it. I'm not going to, just continue fighting that forever and trying to curve fit something that's going to beat it. So I'm going to go with the first combinations that we had, basically the baseline scenario from the original backtest. I'm still going to go with this one. This is the one I'm going to turn on live. But I do have a sneaking suspicion that somewhere out there is some combination that does improve this marginally, and I'm not thinking about it, so I will continue testing. Again, if you have any ideas or suggestions, throw them in the comments for sure. But what this does mean is that I'm going to be moving forward and turning this thing on. It's been too long. We've gone through some of these periods. I want to get some of these trades in, and I've talked about why I want this opening range breakout as part of my existing 0 DTE strategy that I have. We wanted a strategy that's going to have potentially a little bit higher win rate and start to pull up the average win rate of the whole strategy. And it's just a good fit. I'm already doing 0 DT, 1 DT. I'm doing different things. This is a good one to kind of pull up the whole strategy and works well in combinations with the other ones. So what I'm doing here is you can see I'm going to be running both of these strategies. So both of them are going to be inside the same bot. I've combined it here in the combo results. You can see that it's basically only opening test B if test A is not open, vice versa, obviously. So that's a good one. It's a good combination to use. And so now what we need to do is just essentially create the bot to do this. All right, so how we create the bot for this combined backtest is actually pretty simple. We can go down to these 3 dots here, click this, and then we can create a bot right here. So what I want to do is just change one quick thing, which is just going to do 1 position per day, 1 position at any time. It's exactly the same results for this one because you're only opening 1 position if the other one's not open, but I just do that just for clarity's sake. But I'm going to go here and create a bot, and in this case, I'm going to call this my ORB 0 DTE strategy. Let's just call it 60-minute ORB, 60-minute ORB 0 DTE. And I'm not going to connect it to paper trading. I'm going to connect it to my live TradeStation account. In this case, probably $1,000 is $3,000 might be good enough just to give it some capital and room to run. You can see strategy number A and strategy number B, $5,000, $7,000. I'll probably bump it up here just a little bit just to give it a little bit more room to run. If it starts to decline, I can give it some more capital, but I've already allocated to a bunch of other positions. So, all right, so now what I have to do is for each of these different tests, that's going to create a new automation for that specific test. So test A will get its own automation, test B will get its own automation. And what I need to do here is I need to set the way that I'm setting my trade pricing. Now, in this case, we're letting all these things go to expiration. So I don't need to necessarily worry about closing trades. You can just leave that in there. But for opening trades, I am going to do 100% of the bid-ask spread and up to 5 cents of slippage. That mirrors what I did in testing. So in testing, I included slippage of 5 cents on entry for everything. So what I like to do is I like to do the combination here for sure, which is that I'm going to do 100% of the bid-ask spread. That way, in case the bid-ask spread is insanely narrow, I can do the 100% or up to 5 cents of slippage from the mid. So if the bid-ask spread is super wide, I'm only going 5 cents from the mid anyway. So what I'm going to do is I'm going to save that, do the same thing here that's already in here, 100% from the bid-ask spread, 5 cents from the mid. Don't need to worry about closing trades. If you did have closing trades, you would do maybe essentially the same thing. I would do the same thing, slippage from the mid. I don't have to worry about it here because these both are going to be running to expiration. And since they're SPX, they're just going to expire and be cash settled. And once you're good, you just simply hit the button to create the bot. Now, when you go into the bot settings, you can see that the account is connected here. I'm going to move this into my bot group, which is my 0 DTE bot group. I'm going to turn on the automations. You can see my position limits are 1 per day, 1 at any time, and day trading is allowed. Again, I don't need that right now because I'm letting it go to expiration, but it is what it is. Scanner number A here, this is the original scanner that is going to be opening the short, the short put spread position? Yeah, so what I want to do here is I want to rename this scanner. So I'm going to go here to the scanner. Actually, I can open up the scanner here. I'm going to rename this ORB 60-minute bullish breakout because that's what this one is. Go ahead and save that. I'm going to rename this one here. This is just what I do on my own one. 60-minute bearish breakout. There we go. So now I know which one it is. This helps out too because eventually when it gets into positions, I can see exactly what automation actually triggered that. If I just leave it at test A, test B, you could go into it and see what it did, but I just like to clarify things a little bit more. Another thing that I'm going to do here is I'm going to go down here and I'm going to also add a tag here for orb. So I want to add a tag to that particular open position action, and I want to add a tag to this position open action. I'm going to add those tags here. You want to leave that test B in here or test A in here because it's referencing that for opening a new position. If you do start to adjust that, you'll have to go into here and start to change some of the other automatic decisions that are added in here so that you can make sure that they're congruent with one another. But again, because it's referencing one position at a time and not allowing it to open multiple positions on an opening range breakout, then you want to make sure that that gets taken care of there. So just leave those in there. You can just add tags to it for tracking purposes if you want to, but that's what I'm going to do. So now that my automations are good to go, this thing should start running as soon as we get to that 60-minute opening range breakout range and start to look for positions to get into. So that is my new orb strategy that I'm going to be running. It's now live. It's connected to my live TradeStation account. As always, hopefully this was really helpful for you. If it was, let me know in the comments. Like, subscribe, share this video if you thought it was helpful, and I'll see you on the next one.